Did you file your tax return this year to find that you owe the IRS money and wondering how is that possible? You're probably thinking to yourself that it must be your employer's fault for not withholding enough taxes from your check. It's possible. Mistakes can happen. But before you storm into your employer's office yelling that you owe the IRS a large sum of money and it's their fault, let's take a look at the main culprit in this scenario, your W-4 form. The days of filling out single zero, knowing that you would have the highest amount of withholding taken from your check if that's what you wanted, or claiming married, 1, 2, 3, etc., are long gone. A new, redesigned W-4 form was released in 2020. According to the Frequently Asked Questions page for the new design, the form was designed to reduce the form's complexity and increase transparency and accuracy of the withholding system. While it uses the same underlying information as the old design, it replaces complicated worksheets with more straightforward questions that make accurate withholding easier for employees. Huh? Most people find the redesigned form more complicated than the old one. While the old form had a worksheet you could fill out to determine how many exemptions you should enter on the form, with the old form, everyone knew that single zero would take out the most taxes out of your check, and whether you claimed single or married, the higher number of exemptions, the less tax was taken. Simple. With the redesigned W-4 form, you fill it out using information you would normally include on your tax return. When filled out correctly, it should make your withholding more accurate when you file your tax return at the end of the year. This can lead to a lesser refund or a lesser amount due. Your federal withholding is based on your gross pay and your W-4 form. Every section of the redesigned W-4 form plays a part in the calculation of your federal withholding. Step 1, Item C, your status. This is the status you would select on your tax return. Steps 2 through 4 should only be completed if they apply to you. Otherwise, you skip to Step 5 and sign the form. Let's review Steps 2 through 4. Step 2, multiple jobs or spouse works. See this tiny little checkbox? While this section explains the reasons why you would check this box, the simple answer is checking this box will tell your employer to take the higher withholding based on the status you selected in Step 1. Step 3, claim dependent and other credits. In this section, you multiply the number of dependents you are claiming by the corresponding dollar amount, add them together, and put the total on line 3. This will reduce the amount of federal tax being withheld from your check. Step 4, other adjustments. This section is optional. Item A, you can write in a dollar amount of other income that you expect to receive that won't have any withholding. Doing this will increase the amount of federal tax withheld. Item B, if you will be claiming other deductions on your return other than the standard deductions, enter them here. This will reduce your federal withholding. Item C, extra withholding. Just like the old W-4 form, you simply enter an additional dollar amount you want withheld each pay on top of what your withholding is. Entering a dollar amount here guarantees you will have something withheld. If you're not sure what to fill out, the best person to speak with is your accountant. If you don't have an accountant, you can visit the tax calculator on the IRS website. Always be sure to check your pay stub and give your employer a new W-4 form if you need to make changes to your withholding.